Bitcoin just delivered one of its most explosive weeks in years, climbing more than 25% from Monday and briefly touching $79,500. But this rally was not driven by one headline. It was powered by three forces hitting at once: a political push from the White House, fresh liquidity hopes from the Treasury, and a brutal short squeeze that forced bearish traders to buy back Bitcoin fast.
President Trump told Congress to take the next step on the crypto market structure bill at a White House event packed with crypto CEOs. He called for a fair version of the Digital Asset Market Clarity Act, which remains stuck in the Senate. Chainlink CEO Sergey Nazarov told CoinDesk that Trump pulled executives into the Oval Office for feedback and that the administration thinks passage is very doable. And X is in talks to use stablecoins like Circle's USDC to pay creators for their content, according to a person familiar with the plans.
The turning point came after President Donald Trump hosted major crypto executives at the White House, including Coinbase CEO Brian Armstrong, Ripple CEO Brad Garlinghouse, and the Winklevoss twins from Gemini. Trump urged Congress to pass the long-delayed Digital Asset Market Clarity Act, arguing that clearer rules are necessary if America wants to lead the global crypto industry. The Clarity Act would create a broader legal framework for digital assets and divide oversight between the Securities and Exchange Commission and the Commodity Futures Trading Commission. The House approved the bill last year, but it remains stalled in the Senate, where it will need 60 votes to clear a procedural hurdle expected on September 15th. That optimism was reinforced when the SEC proposed lighter registration requirements for crypto issuers, while the CFTC prepared its first Innovation Advisory Committee meeting focused on crypto, artificial intelligence, and prediction markets. Still, the market reacted immediately. Bitcoin pushed above $71,000 on Thursday, while Ether and several other major cryptocurrencies also surged. According to CNBC, Bitcoin was trading around 5% higher early Thursday, while Ether had gained more than 9%. The rally quickly spread to crypto-related stocks. Coinbase climbed about 7%, Strategy added nearly 8%, and Mara Holdings rose almost 10%. Trump also specifically mentioned Hyperliquid, saying regulators were working to bring the decentralized derivatives platform into the United States in a fully compliant way. That comment sent Hyperliquid's HYPE token sharply higher, making it one of the biggest winners from the White House meeting. But Washington's crypto message was only one piece of the story. The U.S. Treasury had also doubled the size of its buybacks of longer-dated government bonds following a severe bond market sell-off. By purchasing more debt, the Treasury helped ease yields and borrowing costs. Lower yields and a softer dollar often encourage investors to move toward riskier assets, including Bitcoin. Then came the short squeeze. Bitcoin had spent roughly 6 weeks trapped between $62,000 and $66,000, after falling from an all-time high near $126,000 last October. That weakness encouraged traders to build large short positions, betting the decline would continue. When Bitcoin finally broke higher, many of those positions were forced to close. Because closing a short requires buying the asset back, the liquidations added even more upward pressure. By Friday, Bitcoin had reached an intraday high of $79,500, before easing to around $77,700. That left it more than 25% higher for the week and marked a dramatic reversal from its early July low near $57,600. The bigger question is whether this momentum can last. Regulatory clarity, easier financial conditions, and forced buying created a powerful combination, but none is guaranteed to continue. The Clarity Act still faces political resistance, including demands for stronger ethics protections, while bond yields and broader economic conditions can change quickly. For now, Bitcoin's comeback shows what happens when policy, liquidity, and trader positioning all turn bullish at the same time. Whether this becomes the start of a lasting breakout or another temporary surge may depend on what Washington does next.